Hello, I'm David Chaston with 989, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of serious allegations against the culture at the big Australian banks. But first, the US Federal Reserve said overnight that economic activity expanded from early April to late May, and growth was expected to continue at a modest to moderate pace against the backdrop of declining oil and gas investment. It was a fairly rosy assessment. American data out overnight also impressed. Their trade deficit shrank on higher exports and lower imports, mainly of oil. And the ADP Employment Report, the precursor to their Non Farms Payroll report, showed rising jobs growth. That contrasted somewhat, however, with the OECD, who downgraded their forecast of American economic growth. Rather than 3.1% growth this year, they now see the giant US economy growing at just 2%. In the same assessment, the OECD noted that jobs growth will pick up in New Zealand as our economy stabilises at a healthy level. But they call for more housing supply in Auckland and for taxation of trading gains on property extended and more strongly enforced. Europe reported slightly lower jobless levels overnight, continuing a trend, but they are still at crazy level of 11.1% on average. The range is 4.7 in Germany to 25.4 in Greece. In Australia, ANZ has been named as one of the big banks frustrating an official ASIC investigation into the fixing of key market interest rates in behaviour the corporate regulator has called absolutely appalling. And yesterday, first quarter GDP data showed that Australia's economy grew at its fastest pace in a year as they shipped more minerals abroad, built more homes and bought more consumer goods. It was an upbeat surprise that sent the Aussie dollar higher, but observers doubted the first quarter result can be repeated. In New York, US Treasury 10-year benchmark yields jumped even further in trading today. It's up now another 9 basis points to 2.36%. This is a very dramatic rise in benchmark interest rates and is being reflected in the long end of New Zealand swap curve, and that will undoubtedly get even steeper in local trading today. Internationally, bond markets see inflation looming. There may be brutal consequences for bond market investors, however. The US oil markets are lower today, with the US benchmark price now back under $60 a barrel again, and the Brent crude is now under $64 a barrel. OPEC signalled overnight that it is set to carry on pumping oil for nearly flat out for months more, content that last year's shock therapy has revived demand and knocked back growing competition. The gold price is down as well by $10 an ounce to $1,184 an ounce. New Zealand dollar is also lower this morning, currently at 71.4 US cents, 91.9 Aussie cents, and at 63.5 Euro cents. The TWI is at 75.4. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.